Back home in India, markets at least are stable, 10,800, and despite overall Asia not in that great shape right now. Prasanth Prabhakaran is here with me. Prasanth, long time, nice to have you on the show. How's it going with you at Yes Securities? We understand that there's a surge in retail participation. Are you also observing the same, and what kind of conversations are your key managers having with that section of the market? What's the sense you're gathering?
Yeah, Ajay, it's a fact that the number of accounts that are getting opened and are transacting has gone up multifold times over the last quarter or so. To be totally frank, I'm very uncomfortable with the scenario, though I am a broker, because of the simple fact that if you have a lot of new time investors coming in, when the economy is under distress, and they do not understand what they are ending up doing as far as fundamentals are concerned, or they do not understand even technical trading, then the chances of a collapse in this portion is very, very large. It is our primary responsibility, it's a fiduciary responsibility of brokers to try to end up ensuring that you end up curbing the trading instincts of the new generation of investors which are coming in. It is very good from a business perspective for a short term, but in the long term, if these clients end up losing their capital because they are reckless in trading, they do not understand what they are doing, it is going to create a chaos in this market in the future. We have already seen over the last 4 or 5 years, when the volatility in the markets has been at the maximum, the introduction of clients in the segment had dropped drastically. If we have to sustain the flow that has come in the last 4 months, we have to make sure that the clients are well advised and protected over the period to come. It's a difficult market to trade in when the correlation between actually fundamentals and liquidity have no sense, even for the best of investors in the market.
No, you have a fair point, but one is also still unclear. Or is it difficult to put all these new traders and investors which are coming into one bucket? There is also a sense that bulk of these are very informed young investors, and who are approaching the market in the fall and not at the peak, March onwards, also with all these sophisticated methods of risk management, etc., also in place. So let's hope so that these are informed guys who are coming in. Let's get your sense on the markets then, especially banks. I would like to understand from you, banks and NBFCs. That's the largest section of the market. Till in March and April, maybe part of May, it became the most hated. But the last 1,000-1,500 point rally in the market, or even in the side market, actually has been led by banks and NBFCs. What is your understanding? You've been on the other side as well. You tell us, what's your sense on ground with these moratorium numbers also shrinking now? People are kind of getting excited once again, and some short covering is happening. But how are you reading the fundamentals?
So Ajay very rightly pointed out, this segment is largely affected by the COVID crisis that has gone by, because you have had to make offerings of postponing your EMIs, postponing your payments, be it on the SME, MSME, even on the retail side, which is there. Now, any banker that is there that we are speaking to is being conservative in their thought process because of the simple fact that you have to make provisions which are going to be needed in case this crisis continues for a little more time. Let's assume that we are assuming that the economy will open up soon. But if it doesn't open up, then the defaults, the present moratorium will again get extended. There will be a chance of both retail and corporate defaults that might happen. As if we have taken a research that our YSL research had done, it is clear that the interest payment that is there is not going to be commensurate with the income that is going to be coming in for the Q1 and Q2 for most of the manufacturing sector companies. So to protect yourself, you have to ensure that you have to raise capital. And that is the struggle that is going on it will continue from now on for the next quarter or so, when most of the banks trying to make sure that they end up having enough capital to make provisions for themselves, and also continue regular business as and when the markets open up. There is uncertainty, as I said, on when the economy will actually take off. Because if you're going to have a lockdown getting extended or your crisis increasing as far as the COVID patients are concerned, then the decision making becomes that difficult. But you have already done a lending. You have to make sure that you have to collect the money back and you have to continue the cycle which is broken at this point. Most bankers are conservative by nature. They are not into the lending cycle at this point of time. Neither is there too much of demand. But the fact remains that at the point that the economy opens, they should have the ratios right as prescribed by RBI. That is why raising capital, which is difficult in these markets, is the priority for most of the bankers, be it an ICICI, Axis, Equitas has talked about that they'll end up looking at raising capital. Our own parent company that is there, all the banks are looking at raising capital. And that is going to be the crux, whether they manage to do it, because this is again nearly around 35% of the overall Nifty weightage that BFSI and NBFCs are doing. Also, the NBFC segment will be even more affected because it is even more difficult to raise money there. So it's a segment that you need to keep on watching carefully and be careful in your portfolio with strict stop losses to be adhered to.
Sure. Fair point. Prasanth, let's talk about the broader market. The broader market valuations have been crunched after a big rally all the way from 2013 to 2018, and then 18, 19, part of 20, they've started moving short. But 2 years were bad as bad can get. The biggies, the heavy hitters of the market, we all know the names, got massively hit on that section. Last couple of months, there is some interest coming back, and some of the quality mid caps are limping back to normalcy. Even the commentary is improving, and the big HNI and PMS world is looking at them favorably. What are your thoughts on the broader market valuations? Some of the managements your research team may have spoken to, some feedback from there. What are your thoughts there?
So Ajay, the thought process in the mid-level companies, the mid-caps, remains uncertain to a large extent because there is no continuity of business that they are ending up seeing. And for them, what was supposed to be a June opening as far as business was concerned is not even a July opening now, and it will get postponed to a August, September, depending on the scenario or the call that the government takes at this point of time. If valuations in this segment, now let me correlate this back to the earlier thought that we had when we had talked about fresh investors coming in and the mid caps and small caps moving. All these are detrimental because it is not supporting as far as fundamentals is concerned. That is why I was saying that the new investors need to be totally clear on the fundamentals when they end up looking at it. The regular investors who are in the market are very clear that they'll operate with strict stop losses at this point of time. But yes, once this uncertainty goes away, the pent-up demand that is going to be there, the pent-up cycle that has got stopped, is what is giving comfort to the market, saying that it will start increasing. And that is why the valuation, though it has gone up in the last couple of months from the March period onwards, it is still going to continue because the segments which are going to do well, like the rural that we have talked about, FMCG, there are the two-wheeler companies that are supposed to end up having an uptick. So the present segments which have been laggards in the last 5 to 6 years might just end up being the leaders in the next rally that might come about. So choose your segments and stocks very carefully. But the rally, the risk to reward ratio is not in favor of reward at this point of time. You have to be extremely careful because you have a very big impediment right now, which is the economy has to kickstart fully. So you have to give it next 6 to 9 months. By the time this normal cycle sets in, everybody's business comes back into normal. But building in portfolios for individual stocks, it will still be a call that will be taken by a handful of companies that all the sectors that we have spoken about, which are still attractive at this point of time.
Sure. Let's see the flash. Let's look at a flash which just came in on the screen that Prime Minister has asked Railway Ministry to speed up the process of Container Corporation privatization. The Container Corporation stock was up 1.5%, but this brings into spotlight the government's focus on reboot of the entire PSU space. Now we've seen some of the names like BHEL, BL, etc. got re-rated there. Perhaps now Concor is the stock to watch out for. If you could just get those flashes back. There are also news in morning newspapers that BSNL, MTL privatization or selling out is also on the block. What are your thoughts on this entire PSU space? We all know they are not as efficient as some of their private sector peers, but then the valuations also of the PSU basket is at multi-year low. Do you think that it merits some cherry picking in that entire PSU space, or it is very difficult for a retail HNI investor to do that and it may full of risk?
See, Ajay, the same problem that we have talked about banks are also a problem for most of the PSUs. BHEL that you have talked about is talking about using their land parcel to end up raising capital, to bring in capital into the system so that they can kickstart the entire process again. Most of the companies that are there in the PSU space are very rich as far as assets are concerned. And that gives the comfort because your valuations have been beaten down to such a level because efficiencies have been low. But if they manage to end up combining the thought process of the present government of being Atmanirbhar, along with the fact that they bring in capital into the system and are able to kickstart the economy that is required, I think so all this will form part and parcel of a small portion of your portfolio to be allocated to PSUs. These you have to be extremely careful in choosing. You should be able to identify the ones which will be able to raise capital and get the business kicked off to the next level, which hasn't happened for the last 5 or 6 years since the PSU bank cycle got stopped for most of these players out. PSU banks were not into a lending cycle from practically 2013 to 2016-17. But post the crisis that arose in the private banking space, a lot of liability accounts have moved to basically the PSU. So they are flushed with funds and only the lending cycle has to start off, or making sure that they are kickstart the defense projects or the other projects that the government is focusing on the infra side. It will be the surprise pack that might happen in the next couple of years. But it's still a 2-year story to be played out.
Okay, my last question to you is on country's biggest, most valued company, and with its 14% weight in the index, has been the biggest contributor in pulling the index last 3,000 points on the Nifty. In fact, we had Facebook's Ajit Mohan on the channel also earlier. A slice of that will go shortly. But the way Geo Platforms has been unlocking value for Reliance Industries, perhaps analysts in the street are pinning their hopes on the next round of value unlocking in the retail business. 15th is when the AGM is. What are your thoughts on this conglomerate, the heavyweight Reliance Industries? People are scared looking at the valuation expansion which is taking place, whereas the institutions like the marquee names are just piling on. Any thoughts there?
So Reliance has been on a buy list for the last 2 years plus. And research remains extremely bullish on the stock because of the simple fact that if the management has to bring in the names that they have brought into the geo part of the business, they'll also get the same thing done as far as the retail portion of the business, and there will be value unlocking that will happen from that side too. You have got to understand that the way the management has moved about garnering market space for themselves, market share for themselves, and subsequently making sure that the pair of debt is the right way to go about building up, scaling up, and getting value out of it for shareholders. This stock still has enough juice left in it, and it will be a portfolio stock at least for the next 5 years that you should have into your bucket, because it will keep on ending up having all the products that they have introduced slowly and steadily coming out in the market by way of either an IPO or by way of dilution in equity to bring in capital into the company.
Okay. All right. On that note, Prasanth, we'll thank you. Thank you so much for joining us on the show, and look forward to having more conversations with you on my show.